Palantir plunges after CEO Karp changes share sales plan. Pentagon budget cut report. This is actually not the reason that Palantir fell 10% today in regular trading, down another 5% here in after hours. Here in this video, I'll tell you the real reason behind this, and I'm sure these things are not helping, but it was already known information in the beginning of the trading day. In fact, at 7 o'clock in the morning, we knew about the Alex Karp change to the share sale program. We knew Alex Karp was planning on selling over $1 billion worth of Palantir over the next weeks or months. We knew that at 7 o'clock in the morning. And if that report is the reason, hypothetically, why Palantir is down so much, look at RTX. Defense, missile bullet supplier was actually green today, up 1.33%. What about Lockheed Martin? Lockheed Martin was up 1% today as well. Yes, they did take a move down on the initial reports of the 8% budget cut for the military. This is not the big reason I believe that Palantir is falling today. Because make this make sense. SMCI was doing very well today, and at the same exact time started selling off alongside Palantir. Same exact time. Like, the charts look almost identical. Nebius, one of the names that I really love right now, reports earnings overnight tonight and into tomorrow morning. AI stock, same looking chart. And there's a lot of other names. DJT, just to point out another one. Not as dramatic, but similar looking chart. This looks to me more like a liquidity issue sparked by the Fed and by the FOMC minutes. So Atlanta's Fed Bostic says January CPI may be a bump or a new trend, reduces confidence in 2025 outlook, warns policy changes could impact inflation and productivity, notes business leaders optimistic on regulatory changes but expect to pass tariff costs to consumers, says Fed did not cut too much last year, policy remains restrictive, supports balance sheet reduction but monitoring to avoid over drawdown amid debt ceiling uncertainty. I think this was more about the end of quantitative tightening more than anything else. First thing I will point to from the FOMC minutes is, quote, Fed officials think that strong January CPI implies lower or better prints the rest of the year, rather than implying that Q4 inflation was too low. So basically, the Fed thinks we will continue to see progress on inflation this year, and this was really the big one. This caused the bond market to actually react today. Several participants suggest halting or slowing balance sheet reduction pending debt ceiling resolutions. As Fiju here on X says, a reminder that every FOMC member has to unanimously approve these minutes. This is intentional. So really, people are suggesting that QT could come to an end this spring. That means that interest rates will likely come down. Not the Fed cutting rates, but 10-year Treasury yields. Now, QE, quantitative easing, is when the Fed goes out and buys bonds. It's a way for the Fed to control long-duration bonds. QT, quantitative tightening, essentially just means the Fed is like your sink would trickle water, right? The Fed is trickling water out of their balance sheet, meaning bonds, okay? So they're continuously allowing a supply of bonds to enter the marketplace. So bonds can be tricky for a lot of newer investors to kind of understand. There's an inverse relationship. So when people are buying bonds, yields come down. When people are selling bonds or not buying enough bonds, yields, well, go down, okay? So if the Fed is allowing these treasuries and from their $7 trillion balance sheet to be let out into the marketplace, quantitative tightening, what they're actually doing is forcing bond yields up, okay? Because they are introducing more supply. So if the Fed stops that, turns that sink off, if you will, there's not going to be that extra supply of treasuries hitting the markets and less pressure on treasury yields actually rising. I think this had something to do with the liquidity crisis today. I'm calling it a liquidity crisis, because in certain stocks it definitely was. And this, I can't prove this, but it makes sense to me. Some of the high-flying stocks, the stocks that have done the best recently, I believe got this sharp move lower in, the last hours of the trading day today, the last hour really. Palantir, SMCI, some of the stocks that have done the best. Because if rates do go lower, you're likely going to see a broader participation. You're not just going to have the Palantirs that are the ones that are doing really well. And I know we've seen a little bit of a broadening recently, but rates coming down will likely benefit more areas, more stocks. So, with this rate dynamic, it's really been stock by stock. Like Palantir has done very well. Dollar General has not. Other names have not. And SMCI has done well recently. You've really seen the stocks that have done the best sell off the most in the last hour or so of trading. I believe that's because investors are kind of positioning for a broader market rally. And companies where interest rates will actually, benefit if rates go lower. Like Palantir is probably not going to benefit from rates going lower, from an end to quantitative tightening. Same's true with SMCI and some of the other liquidity names that sold off. And I think that's why Tesla actually did well into the end of the trading day, among obvious other reasons we will discuss here in this video. So this is my theory to why you did see a bit of this liquidity crisis. I think it had to do with the FOMC minutes and interest rates potentially coming down in the next couple of months with an end to quantitative tightening, which broadens the horizons of where investors should be investing their money. Okay. Interest rate sensitive companies. Not just, high valuation companies, which, Palantir, right? SMCI, not as high value, but they have their own issues. It just really broadens the horizon. That's just what I noticed. Let me know your thoughts down below in the comment section. That's the bullish side of this. That this was just a big, aggressive rotation. As these stocks were doing really well, as we got new information. The more doom and gloom outlook to this would be, well, the high flyers usually go down first before the rest of the markets. I don't believe that is this, situation that we're being presented with. I don't think it's the start of a, larger crash or anything like that. But I am open to opinions. I acknowledge my theory may not be correct. That's what makes sense to me. Let me know if that makes sense to you down below in the comment section. And of course, it was kind of all of these things put together. When you add it up, you get a pretty, dramatic sell down in Palantir. I don't think there's any right or wrong answers when it comes to what's going on. If you guys have any thoughts, let me know what you guys think down below in the comment section. So that's going to do it for this video. Have a great rest of your day, and I will see you in the next one.